Hi, I'm Vince Molinari, and welcome to FinTech TV. We're broadcasting from the iconic New York Stock Exchange, and I'd like to welcome a very special guest today, Gabriela Borospi, who's also known as Gabby Wall Street. She's the founder of Latino Wall Street. Gabby, welcome to the FinTech TV. Welcome to the New York Stock Exchange.
Thank you so much, Vince. I'm very happy, excited, and grateful to be here with you.
Well, the gratitude is ours, and I am so happy today. We're announcing our partnership, FinTech TV, Latino Wall Street, coming together to unify, collaborate, create content. Thankful to you and Tony. We're very excited about the beginning of this journey.
Thank you so much for being such a great partner. We're so happy to be joining officially and to be launching this new show.
Well, look, and I think we have to check with the New York Stock Exchange archives, but we're going to be doing Spanish-speaking segments, shows, and I think it's the first time on the floor of the New York Stock Exchange that there's been a dedicated Spanish-speaking language show.
Yes, and I think that's crucial because the Latino community is growing so much in the United States, and there's such a huge addressable market. So to be able to deliver also, the financial content and education in Spanish, I think it's a huge expansion thing for FinTech.
Well, great expansion for us, and frankly, great expansion and visibility for the New York Stock Exchange as we continue to bridge communities and create that content. When we talk about 400 million Spanish-speaking people, that is an amazing potential audience. So we're very grateful to partner. I'd love if you can frame for us a little bit, the vision of Latino Wall Street, why you started it, and really the mission.
Yeah, so basically the idea started a long time ago when I attended NYU, and my dorm was very close to Wall Street, and I was exposed to that world since I was literally a teenager, right? Like I was a student, and very soon I realized there was something missing, right, in the Wall Street market and the investment world, is that there were not enough women and there were not enough Latinos. Right? Like that was obvious. So I had that idea since a very young age, but I didn't take action on it until 2019 when we officially opened Latino Wall Street. I just had to meet the right partner, and I actually met Tony, and he had all the skills I didn't have, like software and all these things that I needed to actually launch this great platform. And we did it because we saw there was a huge gap in the market. There were no actual leaders in the investment world, finance world, delivering this education in our native language. And we saw this as a huge opportunity, not just for us, but for them, because they didn't have the skills and the things I had, and I was very fortunate to be exposed to that since I was literally a student, right? When I was 18 and I started going to school in New York City. Most people don't have that access, that opportunity, that circle. So I really thought about it for the longest time until we actually did it. And when we did it, it was almost like overnight, right, that thousands of people reacted to it. Online, we went viral very quickly because there was obviously a missing gap, and people need this. No matter what you do in life, you're going to need skills to manage your money, to be able to invest, diversify, protect your money. Something is always going to happen in a period of a lifetime, so you need to be prepared for that. And the fact that there was so much lack of education in our communities, made us be a stand for it. So that's why we opened Latino Wall Street.
No, and to your point, so sorely needed, financial literacy and education across the spectrum, but your ability to deliver that in native language to have greater consumption and adoption, I think, was really a big differentiation in what you set out to do.
Yes, 100%. So we could have just said, we're going to, focus on our Latino community, but in English. But the whole point was that the missing information was in Spanish, right? Because I realized living in New York City for such a long time that it was almost like this known thing. People knew exactly what Wall Street was, how it worked. Even if you were very young, you had the exposure and the knowledge, at least basic knowledge. But in Spanish, there was nothing, zero. Like, people didn't even know what Wall Street was, or that they could even be part of it and access it and buy their first share. They had no idea. They thought it was like the most impossible, faraway thing, only for billionaires. And it's been democratized. Maybe at some point, when there was no internet, it was very different to be a shareholder, but now anyone could do it. So just being able to bring that, the whole world, completely new to them, I think has been a major, paradigm shift in a lot of people's lives.
And you make a great point, Gabby, when we talk about democratization, right? Democratization is so much information, education, access to the capital, but I think one of the things that I really applaud Latino Wall Street for is the democratization to be able to create wealth and financial planning and that piece of education that allows people to plan for their futures, and whether that's their own retirement or education, weddings, all the kind of things, but to realize that there's a pathway to wealth creation that wasn't necessarily available to the community prior to a lot of this.
Yes, planning for your future, it's crucial. If you don't do it, and if your parents, don't have the knowledge and they don't do it for you, then literally nobody's going to do it. I started very young in this world because, again, I was exposed to it since I was 18. But when I met my Wall Street friends who were young, in their 20s, and they were trading the stock market, I realized they had actually started since before they were born because their parents had the knowledge. So I felt like, oh wow, I discovered this at 18, that's great. They looked at it as you lost 18 years because that compound interest, if you will, those results of what the market has done the last 2 decades, if your parents knew and they opened that for you on day one, you could have benefited from that. So I never thought about it that way, but then I realized when I have my son, the first thing I'm going to do is I'm going to plan for his future since day one, so he has an advantage. And that's one of the things we're going to teach the community, that there's no point in waiting. Nobody ever got wealthy or made money just waiting around, right? You have to take action, and if you do it as soon as you can, or if you find out about it, like when you're older, you can always have that opportunity with your kids, grandkids, so there's always an opportunity to start since the beginning.
Never too late, and it's great to have the education side. Look, I'm really looking forward. You're going to be doing some Spanish-speaking language commentary on markets. We're going to have Tony coming on. We're going to be interviewing guests both in English and Spanish, marquee leaders of the Latino community globally coming on. So there's going to be a wealth of content that's, I think, so educational, but really bridging communities, and I think that's so powerful.
Yes, just to be more inclusive, to bridge communities, and to be able to give, such a huge market out there. I mean, huge, 400 million people worldwide. Online, you can reach all of them, right? And in the United States, over 50 million Spanish speakers. That's a lot of people, and I'll tell you, a lot of them really, are either not fluent in English or really prefer their native language, like most people would. So I think it's going to be a breakthrough for sure.
Well, and I got to just talk briefly about it as well. The power of the Latino community as purchasing power, as creators, as contributors to the economy. So this kind of goes full cycle, if you will, for advertisers, people who want to reach that audience as well. So I think we have a magnificent opportunity together.
There's a huge opportunity. Look, even in the elections, right? They said we were the ones who made that happen. So there's a lot of power in the community for sure.
Absolutely. Well, Gabby, we are honored and thrilled. Looking forward to launching the episodes, talking about our partnership today with you and Tony. Thank you so much, and delighted to have you here with us today.
Thank you, Vince. Thank you, FinTech TV. I'm looking forward to it.
Thank you.
A 2-day losing streak on Fed Day, and some investors may have liked to have seen a rate cut, but they had a good feel for which way the Fed Reserve would be going beforehand. Chairman Jay Powell saying the Fed is ready to respond to any rise in unemployment or inflation. He also expressed uncertainty about tariff policy, saying the Fed will have to wait and see what impact the tariffs have. Meanwhile, Goldman Sachs is predicting 3 rate cuts this year starting in July, but Morgan Stanley doesn't think Powell and the Fed will cut rates until next next year. Well, joining me here at the New York Stock Exchange to weigh in is Gabriela Berrospi, who's the founder of Latino Wall Street. Gabby, thank you so much for joining me here at the New York Stock Exchange.
Thank you, Remy, for having me. Yes, so the interest rate decision, I don't think it was a surprise. We follow the Fed watch closely, so we knew we had like a 99% chance or something it was going to stay the same. We know Jerome Powell is not on the same page with the president. Trump wants him to cut rates. He's been, pushing for that. So, we kind of need our leaders to start working together, get on the same page, so then we have more clarity, because we've had so much uncertainty this year, and that hasn't helped the markets that much.
Well, in New York morning trade, we are looking at green across the board for the Dow, NASDAQ, S&P 500. Later on this morning, Trump will be back in the Oval Office, and he will be making an announcement regarding a trade deal between the U.S. as well as the U.K. And, of course, the Treasury Secretary Bessent is heading to Switzerland. He will be meeting with Chinese officials as well. So what are your expectations when it comes to these deals? And do you expect to see more of a framework or actual numbers here?
So I think what's actually helping the markets today is more so the commercial agreements, right? The trade agreements that are going to be confirmed later today. So we know there's an agreement now with the UK, and this has been what the market has been waiting for, right? So kind of like, the Fed, we don't really have good news on that end. It's like a wait and see. But now with these trade agreements, they're also saying a lot more of them are coming up very soon, and they're in the final stages of negotiation. So I think these are great news. I think this will help the market a lot, and I think we'll just have to wait and see what do the agreements look like, right? Because it has to be a win-win.
Absolutely. And when we take a step back and look at the volatility for the month of April, you and I were talking throughout that month where we saw 1,000-point moves to the upside as well as downside for the Dow. But at the end of the day, when we look at where we are for all the major stock averages, it isn't as bad as expected. So given the macro landscape as we move forward for the rest of the year, what are your expectations when it comes to not just equities, but also bonds and other asset classes, especially this morning as we're looking at Bitcoin approaching 100K again?
Yeah, that's incredible. I think we're seeing a rush right now towards, specific assets. So of course, when the stock market is in the green, we're expecting trade agreements. They're about to be announced. That helps all risk assets, not just stocks, but also crypto. And also for gold, right? That has been the year of gold.
Yes.
With the more uncertainty we're going to have, the better gold is going to do. Now, it's been interesting because the pattern that's like stocks going up and gold going down and vice versa has been broken. So we're seeing something very similar than the pandemic. Actually reminds me in 2020 when the market crashed and so did gold. So we have to remember that the correlations won't always be exact, but we can definitely expect that the more trade agreements we have, the better the assets in general will be. So we have to wait and see.
And in the meantime, while we're seeing this volatility and shift across the global landscape, there are also opportunities out there. So for viewers out there who are watching and they're looking for opportunities, where do you think they are right now?
So right now for me, the opportunities are definitely in commodities. That's what I'm focused on because this year is so volatile that has been the winning trades, right? But you should never underestimate the main indexes, the S&P 500. If you're thinking very long term, like Warren Buffett says, right? I was just in Berkshire Hathaway with him at his annual conference. You're never going to lose if you stick to a super long-term strategy and you focus on what has worked for over 100 years. So never underestimate that. Always think long-term. But if you're looking short-term, what's going to do best? I really think commodities are the winning sector.
Okay, Gabby, great to have you here at the New York Stock Exchange. Thank you so much for joining me, and thank you so much for sharing your insights.
Thank you, Ren.
My pleasure.
Latino Wall Street.
Latino Wall Street.
Latino Wall Street.
Latino Wall Street. Latino Wall Street. Latino Wall Street.
Gabriela Berrospi.
Gaby Berrospi.
Latino Wall Street.
Latino Wall Street.
Latino Wall Street.
Latino Wall Street.
Please help me welcome our host, the founder of Latino Wall Street, Gaby Wall Street.
Hello, good evening, everyone. Thank you so much for joining us. We are about to get started. I'm going to start with a little quick introduction and then we'll get straight into it because I know everyone's waiting, of course, to learn a lot this evening. So I want to introduce you to the professional who's going to be leading this evening's class, and it's the first time you'll be meeting him. This is a new partnership that we have, so I'm very excited to have the very first introduction class with him. His name is Eric Gebhardt, and he's co-founded Altavest, which is an automated stock index options trading platform. He has 3 decades of experience in the investment space. He has a Series 3 and 65 licenses. He's a former Series 6 and 63 securities licenses, and he has experience in managed futures and the commodity pool operator space and the commodity trading advisor space. So Altavest, what it does is it simplifies stock index options trading by using proprietary technology to automatically create professional strategies and manage risk and reward. Now, what Eric shares with us is that the clients who use his software platform also enjoy the convenience of Altavest one-touch responsive trade alerts, right? That's what they do. They do trade alerts. So you can respond to an alert, and the only thing you need to do is you need to touch accept or reject on your smart device, and that's it. So this is a shortcut. This is a way where, of course, you're going to learn a lot this evening, but if you use this platform that they have, and they are brokers, right? Then you can have an automated system where you don't have to be worrying about 100 things or, you know, learning how to use a platform from scratch. It's literally accept or reject the trade. So something very interesting, very different. So please help me welcome our speaker for this evening, Eric. Eric, welcome.
Thank you, Gabby. Great to be here, and thanks for having me. That was a great introduction. You made me sound greater than perhaps I am.
We can't see you. I don't know if
Well,
you have your camera.
yeah, let me work on that here.
Okay, perfect.
Okay.
So let me, I have to, I think, add spotlight or something. Let's try this. Would you mind sharing your screen with a presentation? And then I'm just gonna make sure they can see you on the side, like in the little corner.
Yeah, absolutely.
So thank you everyone for joining. I know a lot of people register for this class, so thank you for being on time. I always love the people who, you know, are here 20 minutes early and show up right on time. I'm like that, so those are my favorite people. Okay, perfect. So
How do we
now
look?
perfect. I can see the screen, and can everyone see Eric too? If not, I might have to pin your video, but can everyone confirm in the chat if they can see both the screen and him, or just the screen? No, they can't see you. Let me see.
I see my video, but I don't know if that's just me.
The screen. Okay, now. Okay, perfect. I fixed it.
Okay.
Great.
Okay, are you ready to get started?
Yes, let's get right into it. We're ready.
Okay, very good. So we're going to talk about something a little different, probably something you have never seen before. We're going to look at options trading with a twist. We're going to use automation to help us along the way, and we're going to trade professional strategies, the same strategies that actually Wall Street traders and institutions are using. And remember, we are speculating, and we're always accepting risk when we're attempting to profit. So that's the whole idea here. So we do have to run through this risk disclosure briefly. We're not going to read every word of that, but it is important, and you might want to take a screenshot of that image if you like to. But really, the important thing here is that you should only be using risk capital when speculating, and that past performance is never a guarantee of future results. And a little bit about Altavest. Gabby mentioned a bit about us. We've been doing this since 1997. We are a registered introducing brokerage firm, and we've traded perhaps, I would say, tens and tens and tens of millions of futures and options contracts along the way. That's a picture of yours truly and some of our colleagues and floor staff on the S&P 500 options trading pit from a few years ago. And it looks a lot different than that now, folks, because there really is no pit. And we're going to talk a little bit about that. The trading floor is really non-existent. We are registered and regulated with the CFTC, a member of the NFA. We're located in California. And actually, those are pictures I took on a visit to the exchange, so I thought I would throw those in there. And maybe you've seen us before on some of our other events. It's possible. We have a presence online, and we've done lots of in-person events, especially before the pandemic. And we often get quoted in the financial press, CBS, not CBS, Market Watch, I should say, will often look to us for thoughts. You can see here talking about, in this case, the dollar index and the gold market. So perhaps you've seen us. And I know Gabby introduced me with some of my credentials and so forth, and just a little bit more about myself. I graduated from University of Southern California with my BS in Business Administration, also a co-founder of Altavest, as she mentioned, and then some of my securities licenses I've had in the past, and I'm currently licensed for commodities and to be an investment advisor rep as well. Okay, here's a pop quiz. Which option strategy do rookie traders rely on? So think about that for a minute, and you might want to even throw an answer in the chat if you think you have the answer. So we'll get to that answer in just a few minutes. And then what about professional traders? Which option strategy do professional traders really lean into and rely upon? So you might want to think about that one as well. And we're going to jump into something that probably you can relate to. 3 barriers to success when it comes to trading and investing. And this is based on feedback for many, many years. So I think you're going to relate to this. Confusion. So there's lots of noise. There's lots of conflicting stories and price targets and opinions and what you might call clickbait headlines at times. Now, this one here kind of makes me laugh, so I've kind of left it here for a couple of years. So here's a headline. I think it was on CNBC. This guy predicts Bitcoin could reach 250,000 next year. Meanwhile, right under it, someone else predicted Bitcoin could plunge to $5,000 in 2023. So, what is it? Is it 250,000 or is it 5,000? And who are you going to believe? I think that's just completely useless information, but it does generate clicks, I suppose. And here's Jim Cramer just last month when the S&P was declining, and we were, I guess what he was thinking is we're on track here to have another Black Monday, such as in 1987, where the market really, really fell apart. But since he kind of was hinting about that, the NASDAQ rallied about 24% through April. So not picking on Jim Cramer, I'm just saying that it's difficult to look at the headlines and really gain any value from it. You don't want to try to trade or invest based on headlines. And look at this here. This is Wall Street's price targets for the S&P 500. So you can see here's Oppenheimer at the top, all the way down to T. Rowe Price and BCA Research. And the range of targets for the end of 2025 is anywhere from negative 25% to a positive 18%. So you might as well throw a dart and just sort of pick one, because I wouldn't know really who to lean into and who to rely on for that. So I think that's what you might say, too much information. So how many of us can relate to that? Now, what about time? So there is some time, there is some discipline needed if you're going to, for example, be a day trader or do some screen watching, as they call it. But there's so many variables to track, and not many of us have all of that time. We have our lives to lead, and we have family and friends, and most of us jobs as well along the way. So not many people have time for something like this here. It looks great, but I don't know if it's really realistic for most of us. And this is something interesting. I just found this online. This guy says here, I don't know who he is, but just a chat room or something like that. He trades full time in front of his computer from market open until the close, watching, and every once in a while after market hours. So again, that takes a lot of discipline and a lot of free time, and not many of us have that luxury. Now, how about the third barrier? Well, I think the third barrier is really us. Our own brains and emotions tend to get in the way of ourselves and our own success. So our human emotions, we have that fear and that greed when we're trading or investing, when we shouldn't, but we do. When you're doing well, you tend to get euphoric, and then as maybe you're losing some money along the way, you might raise that white flag of surrender and get a little bit despondent. But then, of course, you get optimistic again as things are going well. So you want to try to control your emotions. And I think we have something that you're going to find is very helpful in that regard. And remember too, when you're trading, you might think there's someone like you on the other side of your trade as your competition, but actually this is your competition. The machines, the algorithms, the high frequency tradings, platforms, the bots, as they say, all the automation, they have built-in controls, and they don't have any emotion. Of course, you know, AI now as well. And this is interesting. JP Morgan estimates that systematic trading is over 90% of US equity trading volume. And I think that's absolutely true. And you can see it sometimes during the day where you get these sort of mechanical trends throughout the day with no reaction or, you know, no resistance, or you get these sharp, dramatic declines or spikes. So really, that's really systematic and automated trading at work. Okay, so we're going to jump into a real quick review of options. If you trade options, this will go quickly. And if you don't trade options and haven't ever, this should help you a little bit. We're not going to go real deep and get into heavy math here, but essentially you have puts and you have calls. And puts offer us the right to sell a security at a particular price before it expires. And calls are just the opposite. They offer the right to buy a security at a particular price before it expires. So you have puts and calls. Calls offer the right to buy, puts offer the right to sell. So it's really that simple. And here's just a quick summary. So call options offer the right but not the obligation to buy. Put options are the right but not the obligation to sell. And the price at which you could either buy or sell at, that's called the strike price. And if you're going to buy the option or sell the option, that's called the premium. So you either pay the premium if you are buying it, or you collect the premium if you are selling the option. And you can buy a call or sell a call, and you can buy a put or sell a put. And of course, options have limited lifespan. Every option has an expiration date. So remember, the buyer pays the premium to the seller, and that means the buyer is long that option. And the seller will always collect the premium that the buyer pays, and that's called being short the option. So you can sell puts and calls, and you can buy puts and calls. Okay, so here is the answer to our first pop quiz question. Which option strategy that rookie traders rely upon? Well, rookies tend to only buy options, so they only pay premium and buy options. And there's nothing necessarily wrong with doing that once in a while, but you really don't want to rely upon that because that really is a low probability outcome. And this woman here on CNBC, this reporter, I copied this, and you can go to that full interview there. You see the screenshot, but she made some great points, and so I thought I would use her words here. She says the appeal for a lot of the retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. And this is a fascinating statistic. And I couldn't find a statistic from, say, 2024, but I would imagine the numbers and percentages are all very much similar. So in 2021, 11% of Robinhood's active users made an options trade. But of that 11%, less than 1% actually made a multi-leg options trade. So that's fascinating. And If you're not sure what a multi-leg options trade is, I'm going to show you in just a moment. And you might get the hint with this next question here as to what that answer might be. What is the strategy professionals rely on? Do you think they just buy options, or do they use multi-leg strategies like spreads? Absolutely, they use multi-leg spreads, and they are collecting premium along the way. They're not just simply buying an option. So she says here, an option spread calls for the buying and selling of different contracts. It's a common way for investors to hedge risk and volatility. And it's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. And that's absolutely true. So we're going to look at a few option spreads and how they can be used for collecting premium and not paying the premium. So we want to manage our risk and reward, not get greedy along the way. We may need some experienced coaches along the way as well, and we'll need the correct tools and maybe some automation to give us some assistance. And a lot of these strategies I'm going to talk about briefly here are what we might call, to use a baseball analogy, base hits. These are not going for grand slam trades, not swinging for the fences, as we might say. And the reason why is because when you go for a grand slam, your probability of a positive or favorable outcome is usually pretty low. For example, here's that baseball analogy. Here's a batting champion, Rod Carew, from years ago. He won the batting championship, and he had no home runs. So don't have to read the whole thing, but the point is he had lots of base hits, and he still won the batting championship. And we can maybe look to an insurance company as an example of maybe how we could trade options. So for example, they get paid the premiums to assume the risk. They're selling and managing time. They are insured themselves by hedging, or what they call reinsurance. And they are consistent and they're patient in their process. And they're looking at favorable long-term math, probabilities, statistics. Really it's just number crunching, and insurance companies bet on the idea that they're going to keep getting premiums from you, and once in a while they'll make a payout for a claim, but overall they're going to make some money in the long run. So they're using statistics, and we can do that too with options. So again, short option strategies, meaning you're selling options and collecting the premium. And those can be for any particular market condition. So I want to make that clear. They can be used for a non-directional environment, or bullish or bearish. And the nice thing about these strategies as well is everything about the outcome, whether good or bad, is known in advance. So your profit target and your risk target is always fixed in advance. You always know what those are before you get into the trade. So which options markets should we actually be trading? Of course, there's a lot to choose from, but we have a favorite, and let me tell you why. We like the stock market indexes. These are all familiar to you probably, the Dow Jones Industrial Average, the NASDAQ 100, the Standard & Poor's, or the S&P 500. Those are some of the larger capitalization or large cap stock market indexes. You have a mid cap index like the Russell 2000 as well, and some others. But why we like stock market indexes versus individual stocks? Well, first of all, liquidity. So indexes are heavily traded by the professionals. All the machines we saw, all the institutions, they are trading stock indexes, and that gives you superior order execution because your bid offer spreads are, what they say, tighter. So you don't have any or as much slippage. Convenience. Why not follow just 1, 2, 3, or 4 indexes rather than maybe trying to find an options trade out of over 6,000 securities? And how about diversification within the index itself? Of course, as you know, in like the S&P 500, it's 500 stocks. So that means it's less volatile. A large move in a stock index on a given day might be 3%. That would be a very, very big move. Maybe happens once a year. I'd have to look at that, but maybe twice a year. But individual stocks, as you know, can move 10, 20, 50% or more in a day. I mean, look at Tesla. Wasn't it down almost 20% today, for example? So here's an example on a graph, a stock market index versus individual stock volatility. Here's a particular day. Based on all of the data on this graph here, you see that Meta was down 53%, but the S&P 500 was only down 9%. So that makes a lot of sense, of course, because there's more diversification rather than just one stock. But they might move in different directions on any given day. So an index can move in a different direction than a particular stock or stocks. So, here's NVIDIA was down 13% here, but the SPX happened to be up 2%, up to that point. So that's what you call non-correlation. And we like that in the stock indexes compared to individual stocks. Now, a little bit about commodity futures markets. We're not going to go too deep into this, but let's touch upon this. I think it'll make sense in just a few minutes. So you're familiar with energies and agriculture and metals, currencies, bonds, but also commodities can mean stock market indexes. So that's also called a commodity when you talk about commodity futures contracts. So futures contracts are trading on an exchange, and there's a buyer and seller trading those back and forth just like you would a stock. And every futures contract has basically, they're fungible is the word for it, but every futures contract represents the same quality or quantity, physical or delivery time, and location for all that. So they're all the same depending on, if you're trading a contract of gold or a currency or corn or whatever, every contract is identical. So that way it can be traded just on price alone. But the benefits we find in the equity index futures and options markets would be that you can use these futures options markets for hedging your existing stock portfolio, for speculation. They are highly liquid. I mentioned that as well. And I'm talking about the major benchmark indexes like the S&P 500. Then who trades these indexes? Well, people like us, you and me, these self-directed traders, but asset managers, portfolio managers, endowments, basically Wall Street and the rest of the world, sovereign wealth funds, mutual funds, you name it, and then of course us as well. So why trade options on E-mini S&P 500 futures indexes? So, well, let me look into that. So the really big reason here again is volume. So the E-mini S&P 500 futures market is what you call huge or huge. It trades here over $3 billion a day in notional value. And this is an interesting statistic. This is from the Chicago Mercantile Exchange. It's 10 times larger versus all the other S&P 500 ETFs combined. So E-mini S&P 500 futures really is where all the activity is, believe it or not. An average daily volume in contracts for options over 1.5 million, and that's through 2024. And I think that number is probably well above 1.5 million by now. So these are very liquid markets, some of the most liquid markets in the world. So if you want to trade these markets, where would you start? Well, we're going to talk about option spreads that are created and then managed for you by algorithms. And again, these can be directional strategies, non-directional, or they have multiple legs. So in other words, a spread just means it's not just one option you're trading simultaneously. You might have 2, 3, or 4 different options, maybe even 5 or 6 that you're trading simultaneously. And these are what we're looking at here called credit spreads because you're collecting the premium, not paying premium on a net basis. So you might trade several options in a trade, and the net result is you collect premium, whether it's put spreads or call spreads. So here's an example of an E-mini S&P 500 call spread that you would sell. And you might do this if you were bearish or even moderately bullish, or if you had an idea that the market would be choppy. So here's an example. Here is the S&P 500 stock market movement. You can see it's chopping around here, but when you place the trade, the market was here. We didn't know where the market was headed yet, of course. So you sold this call option here, and that's the red line, and you received 4.5 points for doing that, and you put that in your pocket. But then to hedge yourself, to make this a spread, you buy a further out of the money call option. You can see the strike price here, the 64.30 call, and you pay money for that. So you have to pay some on the money that you receive, but the net result is you still collect 2.25 points or $112.50, and you put that in your pocket. And that's the net result of the spread that you're selling. And then what happens is as the market chops around, it's going up, it's going down, and so on and so forth. And then at this point right here, you can see I have this line. Well, that would be the point where the algorithm that we use would have closed out that trade for you. So you sold it for a certain amount of money, and the idea is to buy it back in the future for less than what you sold it for. You can see the expiration date here is this vertical line, and so you're always going to be out of these trades before they expire. And of course, you have to take into account commissions on these things as well. Then here's an example of an E-mini S&P 500 put spread. And this is just the inverse of what we looked at. You would do this if you were bullish or even moderately bearish, and it would be maybe a non-directional environment. So here's this graph. So here's the market, and you decide to sell this out of the money put spread here. You collect 3 points for selling the 54.20 put, that's the red line. And at the same time, you buy the 5400 put, and you pay. When you buy something, you have to pay the premium, of course. You pay a point. So the net result is you collect 2 points there. And the market you see is dropping and up and down and chopping around. But ultimately, you would close out that trade before it expires by placing an order to buy back the spread for less than what you originally received for it. So if that's not something you're familiar with, think of it this way. The goal of every trade is to essentially buy low and sell high. But of course, you can do that in any order. You might sell high and then buy lower. And that's kind of what we're getting at here. So let me show you real quickly if I can switch screens. Okay, so here we go here. Here is an example of another spread, such as what we just looked at. This is our trade simulator that I just kind of jumped over to. And there are these buttons down here at the bottom. They can go forward and backwards in time and show you how things are have done in the past. But you can see this trade was placed on April 10. And we'll use this button here. And you can see markets moving up and down and up and chopping around. But you've sold this spread here. I think, did I make that clear? Yeah, we sold this spread. It's a put spread. So these are the strikes here, and you can see where the market started. Okay, and then I'm going to scroll down. Before I do, I want to point out this vertical line, and that is the expiration date. I won't get into all the details here because we don't have time for all this, but you can see with our software, it tracks your position every day, and it gives you these color codes. And green means good, but blue means take profits. So you have basically a profit-taking order already, and this can be automated. So whenever the blue signal shows itself, it will automatically place that order for you. So you don't have to watch it and babysit and screen watch. So that's just another dynamic example of a put spread, selling a put spread, and out of the money put spread, and how that works. Let me look at another one here. And I wanted to also, I think, point out that, this obviously you're selling this out of the money put spread, and think of it like this red line here as where you don't want the market to get too close to that red line, because this is actually more of a non-directional or bullish position. So in this case, you see the market kind of drop, but then it started moving higher. So this trade works out. But here's another put spread, and let's see what happens here. I kind of forget what happens, but you can see it's chopping, and it's actually starting to drop and decline. So it's actually going the wrong way for you, getting closer to this short put spread here. But the thing is, you have all this room for error and margin for error above this put spread that you sold. So even though it's getting closer, you're running out of time as well. And that's working for you because we're selling time. And you can see here, you've already had a profit taking signal much earlier anyway. So really, these are very flexible strategies. And unless the market, in this case, really dropped very, very quickly by a lot, then these types of strategies would work well. And then here's a call spread. I wanted to show you, this is really the rookie strategy. So here's a call spread that someone may have bought. So here's the spread that they may have bought. And here's the market trading here at the time. And now look, it's really starting to rally and move strongly higher. And you'd think that, okay, well, now I'm making money. Well, you wouldn't be, because you've lost so much time because it's getting closer to expiration. So even though, the market's running much, much higher and moving in the direction you want it to, it didn't happen quickly enough. So that's why just buying calls or buying puts is really not something you should rely on. It means it doesn't mean you can't ever do it. And if you do it as a spread, that's better because it doesn't cost you as much. But still, I just wanted to point out the distinction there with selling call spreads and put spreads and buying call spreads and put spreads. So these are very simple spread strategies, and you can do strategies that have actually call and put spreads simultaneously. So you look for the market to stay in between those ranges, and some more advanced strategies, but we're not going to have time for that right now. So let me go ahead and jump back here. Okay, like I said, in the future, we're going to have some presentations that I think might blow your mind a little bit here. Hopefully there's not too much hyperbole there. A little humor doesn't help along the way, but I hope that made sense. If you've never ever traded options, it might be a lot to take in at once. But the automation really does help you, and something that we can help you with as well. And then we're going to talk about the trade alerts real quickly. And that actually makes things very user-friendly for our client base. So these are trade alerts, and you just respond to these alerts with one touch on your screen. It's all you have to do. So you simply touch accept or reject, and our technology handles the rest for you. And some of you might have, let's say, newsletters that you subscribe to or trade alert services that you subscribe to, and that's perfectly fine. I've done the same thing. So no trouble there. But as you know, when you get those alerts, whether it's by email or maybe text message, then you have to go log into your trading platform, then you have to copy the alerts, and hopefully you get it right. I've had people on more than one occasion call me after I do a presentation, and they say, I love these alerts. I just got an alert the other day and I said buy when I should have said sell, or they missed the wrong ticker symbol and they've kind of got themselves into a big jam just because they miscopied the alert. So you don't have that risk with these alerts, and you simply just touch accept if you like the order. And again, these alerts are what we call live. So they're integrated with your Altavest trading account. So that's just an example. You just get it on your phone, you receive the alert on email and also on your dashboard. But most people like to get those alerts via text message and simply touch accept or reject. So here's what it might look like. I just did this one here. So you'll get a text message with that link. It'll take you to the alert page. Just refreshing the page there. So this case happens to be selling an out-of-the-money call spread for the July week 3 S&P 500. You can see the quantity is pre-selected for you. And I want to point that out too. The quantity is pre-selected, so every alert that you would receive is custom tailored to you and your account, and based on the account balance and also what trades you may have in your account at the same time. You won't receive an alert that's redundant with the same trades. And you can also lower the quantity or change it. It gives you all the details here, the price of the order, how much money you're trying to collect, and so forth. And then if you like it, you just go ahead and touch accept, and then it just places the order. Just that simple. So that's just a demo account we use, but I wanted to just give you an example of how those alerts work and how we can use automation as our friend and kind of compete in this landscape where all the algos are out there seemingly after us all the time. So these option strategies are flexible. They can be used in any market condition. That's what's great about options. They're just really another tool. And even in bear markets. So for example, remember too that even a drawdown in a stock market can last longer than you think. And if you're unfortunate enough to say buy at the wrong time, you know, you don't always want to just buy and hold everything. Sometimes you want to be a little more interactive. You know, look at the dot-com bubble. You know, if you ended up buying the NASDAQ in early 2000, well, you ended up down 80% in the next 2 or 3 years. I mean, I remember that. I was in the business at the time. So it took about 15 years. That's just my chicken scratch I put on here. But if you were unfortunate enough to buy at the worst possible time, it took about 15 years to recover. So anyway, it's not always advisable just to kind of sit and wait, depending on your circumstances. So really, to summarize the benefits of the automated E-mini stock index options strategies, that's kind of a mouthful, but really it's just another way of saying the benefits of trading these E-mini markets. These strategies are flexible for any market condition, up, down, or sideways. You have premium collection strategies, what you might say a lot of flexibility, and they offer a wide margin of error. And how about the convenience of the automation and the technology as well? And the diversification and also hedging opportunities. So that's called non-correlation. So if you have a spread trade on that might be non-directional and the S&P is, you know, up or down 5% in a month or two, these strategies that you have may not be impacted at all. It just depends, of course, on the strategy, in particular, the strike prices and the timing. But in any case, you get the point. You're not relying on the market to always go up, is I guess my point. And the trade alerts. So you have those one-touch responsive trade alerts. So now we can jump into a few FAQs. My actual slide presentation is over with here. So let's see here if I have any comments and questions.
So I noticed there was a little bit of maybe a misunderstanding, and someone misunderstood that maybe they had to give you access to their accounts, and that's not what we're talking about, right? We're talking about them using the brokerage that you have. So I want everyone to think of like Charlie Schwab, Interactive Brokers,
Right.
which is what people use here. So Eric has a brokerage, which is Altavest, right? It's actually a software platform. But the difference is that you don't have to learn from A to Z because it's an automated process, correct?
Yeah, very good question. Good point. Thanks for bringing that up. So we are a brokerage firm, so this is technology that we developed for our clients. So to be able to use this technology and to trade with us, you would simply open a brokerage account with us. And just like you'd have a brokerage account with any other brokerage firm. And then you would have access to all of the technology and a lot more that I didn't show. That there are some more advanced strategies as well. And then there's a dashboard and so forth. But you did get a taste for the fundamentals and the basics of what the the software does. And then, we're here too. We're real people. So you don't just get dropped off into a chat bot and never hear from anybody again. So we're real people, and we work with our clients and we talk to them every day. And that's part of what we do, is to help people. And we have videos as well and tutorials um, along the way
People are
too.
asking, so what would be the cost, or like, is there a fee for it? Because the software platforms work differently, right? Some charge per trade, others mostly are free to use, and then they charge per transaction. Is that how you guys manage it?
Right. We don't have like a monthly software fee or subscription fee or anything, but as a brokerage firm, there are commissions on the trades. So yes, that's correct. And that's
Okay.
something we'll go into more in Miami, actually. So
Yes. Yes, Eric is going to be in person with us in Miami. So you guys will meet him and his business partner. And he's actually going to be presenting on stage on Sunday. So day 2 of the event, a full presentation, more in depth, and you will have plenty of opportunities to interact with him the whole weekend, because he'll be there the whole weekend. So that should be really good. I think there's a few other questions that we have here. I think she's referring to a trade. She said, what happened if the trade reaches the red mark? Do you know what she's referring to? Maybe it's a previous slide you were showing.
the red mark. Let's see here. Was it back in the simulation that she might have been referring to?
Yeah, I don't really remember.
Mm,
But so maybe.
well, basically each trade, the idea is that you're going to close out each of these short premium collection strategies before they expire. So one way or another, whether it's for a win or a loss, you will have that trade closed out before it expires if you're accepting the automation. So I hope that helps answer the question.
Okay, let me go back to the other questions. Okay, cost, people are asking, we have that. So basically it trades for you and you either accept or reject.
Yes and no. The alerts that you receive, well, let me back up real quickly. Every account is self-directed, so we're not managing the money for people. Just want to make that clear. So when you have an account with us, the account's in your name or your business name or your IRA or whatever it might be, just like any other brokerage firm. And then you are authorizing every trade, whether you're accepting the trade that gets sent to you via an alert, or maybe you're actually creating your own trade, which you can do. And you can then set up the automation to close out the trade for you based on various rules and parameters, sort of like having a stop loss or a profit target in place.
Hmm.
So really look at it that way. So does that answer the question?
I think so.
Okay.
But let us know. Also, there's another question that says, I'm a bit confused. When we hit accept, what exactly are we accepting? The trade.
Right. You're accepting that trade or that order. You want that order to be placed for that particular trade that's on the screen. And if the order is then filled, it just populates your account, and then it will be tracked day by day and then automatically closed out for you when it reaches the profit or the risk target, whichever happens first.
So Melinda has an interesting question that I assume you got a lot, which is, what is the winning rate, right? What is the probability that this works?
No, that is a good question. It's a fair question. But again, every one has different results because everyone is trading differently. So it's kind of like, if we were managing money, we would have those numbers, but we're not. So everyone has different results is really the straightforward answer for that question.
Yeah. And then Chris says, we put our money with you, your brokerage. And the answer is yes. So how this would work is they deposit money into your brokerage, just like they would in Charles Schwab and Interactive
Right.
Brokers. And then that software is automated and it gives you trade alerts, and you can hit accept or reject. You don't have to take them, but if you want to, then it does the work for you. So you don't have to be, it's basically like a shortcut, right? You don't have to be sitting there analyzing and looking for every opportunity. It's just a prompt, and then you decide if you want to take it or not.
Yes, that's a good summary. The way that clients look at it, and we get a lot of feedback, and I'll do presentations and I'll have people call me afterwards and they say, this is exactly what I'm looking for. I want to trade spreads and I don't want to have to sit in front of the screen all day. So I love the shortcut that you're creating where these are pre-built strategies and the management of the trade can then be automated once the order is filled. So it takes a lot of the heavy lifting off the table, so to speak.
Yeah. And Sylvia says, is this only spreads or single options too?
We can trade any option, whether it's a strategy, whether it's an outright long call or long put or a single option or a spread. It's just that I focused on the spreads today. And part of it too is when these trade setups come in, and I didn't show the full software package because that would just be a lot right now in this short period of time. But when these trades are set up and the algorithm behind the scenes is building them and creating them for us, it's looking for certain parameters or else it won't generate a trade. So it has to find a particular profit target that is within a particular range. So you can always see, okay, this is my targeted annualized return on this trade, and I can compare it to a different trade. And so it gives you some idea, okay, I'm going to risk this amount of money, and here's my target if the trade works out for me. So you have something to look at to help you kind of guide you along the way. And then all of the trade numbers, by the way, and I think I did see this in the questions. There's a lot coming through here, but
Yeah,
all of a lot.
I got lost already.
Was it like 100 or something?
I forgot where I even was.
Right, but everything is net of all commissions. So that is factored into everything already. So you don't have to make separate calculations for that.
Okay. So is there a set, Ileana said, is there a set transaction fee? Like, how when I first started trading, TD Ameritrade used to charge like $10 or $20 or something. And then per transaction, this was a long time ago, right?
Right.
Like 15 years ago. And then they'll give you promotions like, oh, you get 10 free trades. So then you'll get so excited because they'll actually be worth some money because they used to pay $20 every time you did a trade. Do you have like a set fee like that, or how does the commission work? It's just like a percentage, kind of like when you buy an ETF and you don't even notice that fee because it's added into the asset?
No, good question. The commissions are 5.25 round turn all in. So that means there's no extra fees, there's no extra clearing fees or exchange fees or any other line item charges. So, there's a couple big box brokerage firms that I've looked at just recently, and I kind of compare. I kind of keep an eye on things, and if you go to their website, it says 2.25 for options trade for futures. Now, keep in mind too, this is futures options, so that's distinct from securities options, totally different. So you make sure you're comparing apples to apples, but if you look at futures options pricing for the commissions, you're going to see quotes, but they only quote it to you on half the trade. So on your entry price. And then you have to remember that, well, they're going to charge you that same amount on your exit as well when you exit the trade. So, and then they have a little, I guess you could say an asterisk by their quote, and it says this does not include clearing and exchange and NFA fees and that type of thing. So really, when you add up all the fees total, it ends up being more than what our round turn all-inclusive rate is. We just give you one rate up front and keep it simple that way. So the rate's very competitive in the futures option space.
Yeah, because people have to understand, right? Most of them have never done futures. Maybe they've done options trading on their own, but futures a different ball game. It's like another market. So
Totally different space, totally different regulatory agency, different exchanges, different environment, completely separate. And I would also point out too that, and listen, I have stock brokerage accounts and I'm trading stocks and ETFs and stock options as just as much as anyone else. So I'm not saying you shouldn't do it, but don't be fooled about the idea that there's free options trading at, I'm going to pick on Robinhood, for example. I think they're the ones who started it. There's something called payment for order flow, and that's getting deep into the weeds. But the bottom line is there's nothing free in this world, and you're just not getting your orders executed at the most favorable prices in those environments. So one way or another, you're paying to trade. It's just not as transparent in some ways versus others.
okay, and speaking of regulation, Lois asks, is the broker regulated? And some people want to know if this brokerage it's available internationally, like in Canada or maybe other countries.
Yeah, I would go so far as to say that we are even more regulated than the securities industry. So yes, we are regulated by the CFTC, Commodity Futures Trading Commission, and that's the equivalent of the SEC on the securities side. And then our FINRA equivalent would be the NFA. So we're regulated, we're members of the NFA, and you asked about trading overseas. It depends. We can't accept accounts from the EU typically, or Canada typically, unfortunately. And that's not because of us. That's just the regulatory
So
geniuses decided.
US only, so that means
Not US only, but for example, we have a lot of clients, believe it or not, and there's clients in parts of Asia. There are clients in Australia and the UK.
What about Latin America?
It depends. It depends on the country. Yeah.
So not Venezuela probably, right? Because
Right.
the
Yeah.
authorities are always blocking them, unfortunately. But like
Right.
maybe Mexico.
Brazil, I believe. We've had Mexican clients as well. And it's a lot of fun having the international clients that I wish we could have more of them, but the regulators just won't allow it. It's protectionism, essentially.
Yeah, no, even some like Charlie Schwab, they're blocking a lot of countries. It's
Right,
kind of
right.
okay. So the fees, and some people are wondering, but if I don't know what I'm doing, I'm a beginner, like how do I know if I hit accept and reject? And we do have some guides through that, right? Like some tutorials and some stuff that the people can learn so that they know,
Right.
to make a decision, you need some kind of background, right?
Right, absolutely. You just don't get thrown into the fire. There are definitely tutorials along the way to help you. And when you receive a trade alert, it's not the trade that you receive, it's not going to be an alert that's going to take up the entire value of your account, so it's going to be every trade is going to represent a very small percentage of your account balance. So you want to size your trades appropriately. And that's a big mistake rookie traders make, regardless if they're trading options or anything else, is they may trade with too much concentration risk in any one position. So something to keep in mind.
Okay, this is really funny because everyone just kind of put their country to ask if it's available. So
What did they do?
they put their country to ask you if it's
Oh,
available. So they go Argentina, El Salvador, how about Panama? How about
oh
Colombia?
boy.
How about Dominican Republic? That's funny. How about Guatemala? Yeah, my community is funny, but they're just wondering because I do have internationals as well. So
Absolutely. No, I
that was
appreciate the interest. And it's just something, it's kind of a case by case thing. And it's really not up to us. It's up to, um, again, regulations and the clearing firms involved. And so, yeah, I wish I had a straight answer for all of that.
yeah, and I guess a very common question is what's the minimum to get started, right? I know that varies with different brokerages and platforms. Yours
Right.
is something very unique, but what would be the minimum to start?
Okay. Well, from what I just showed you on real basic put and call spreads, for example, You can have a minimum, I'd say no less than 10,000. It would be difficult to really do it justice because the margin on a call spread or a put spread is about $1,000 for each particular trade. So, keep that in mind. But beyond that, it's really up to the individual and how much risk capital they have. We've had, people with 7 figures and people with a lot less, but it's really what's comfortable. And the most important thing is the risk capital, what's comfortable for that person.
Yes, so I wanted to remind everyone, Eric is going to join us in Miami the last weekend of this month. That's very soon. If you go on our event website, you can sign up here to learn more about Altavest. So we're going to make sure to be updating you guys about all the different ways to learn with them. And we're going to be doing, more classes, and there's going to be some more exciting announcements with Altavest and the partnership we're having with them. So if you guys just go to the event website and you scroll down, you will see Altavest featured, and then there's actually a tutorial Eric did for us. I think it was an introduction, like a 5-minute thing. So if you click on the yellow link, then it will ask you for your email. You'll get added to the list of the ones who are interested in this software, and then you'll be able to see a free video of him. And then we're going to keep you posted, but please come say hi when you see him. He'll be there, and you're going to be able to ask him all the questions. If you want to repeat this class, we recorded it, watch it again, and then show up with a bunch of questions for him. And it'll be great because then he'll also present. And then the presentation on Sunday at the event will be more in depth, correct? Like you're actually going to show us the software.
I can do whatever the audience would like, but yes, that was kind of the idea, is to review a few brief concepts and then spend a little time in the dashboard on the actual platform.
Yeah, exactly. Yes, so many more things to come. With Altavest, it's important that you guys know what it is. So this is a brokerage, it's a software platform, but it's automated, and it's specifically for the futures market, correct? So like the spreads and all that stuff we learned, it's specifically for futures.
Correct.
So it's very different than what you guys have learned at Latino Wall Street. I know you guys know about options, and the ones who take all those courses knew exactly what he was talking about. And if you didn't take those courses, you didn't know what he was talking about. But there's many people here who have a lot of experience with options trading. So this will be a little bit easier because they already know a put, a call, and they're familiar with the strike price, expiration date. But I just want to be clear, this is for futures, which is a different market, different opportunity, and a way to have a shortcut to learn, because you don't have to, like learn so much since you're working with alerts. You can accept or reject.
Yeah, that's a good summary. And if you understand options, it doesn't really matter what the actual market is that you're trading, in a sense. Options all work the same way. They have the same characteristics. You just happen to be applying options to futures markets. And in this case, in particular, the E-mini stock index futures markets. And if you've never traded those, it really doesn't matter. They move, almost 100% correlated with, in this case, say the SPX or the SPY. So they move point for point with each other. No difference there. It's just a different type of instrument, just subtle differences. One's a security, one's a futures market. One has a certain way they get margined, one's a little different. So it all works the same way, though, with the puts and the calls.
Perfect. And I'll end with this. Eduardo said, I'm interested in this platform. That way I can cut some time to learn because I'm a beginner.
Yeah,
That's
good summary.
The whole thing, right?
That's right. That's very well said.
Awesome. Well, we want to thank you so much, Eric, for your time. That's very valuable. And we're very grateful that you're joining us at this event. So it'll be a lot of fun. You will love it. Our events are a little bit over the top, but we'll have a great time, and everyone will be, paying attention to your presentation because they're very interested, as you can see, in learning more about it and giving it a try and cutting some time having a shortcut to get results. So I'm very happy we did this class, and we'll definitely keep everyone updated, right? We're gonna have a list. We're gonna know once you guys hit the link here, and everyone who joined the Zoom, then we're gonna keep you in mind for when we do the next announcements. We'll have you guys on a special list of people who showed interest in this class. So thank you so much, Eric. I appreciate it. And thanks to everyone for joining. And thank you, Chris, that I know Chris was there. So
Yep, that was great. Thank you. That was a lot of fun. We'll see you soon in a few weeks.
awesome. Take care.
All
Good
right, bye-bye.
evening.